And welcome back to yet another exciting week of the Lazy Money Game. In this week's episode, I will give an update to my portfolio. Then I will answer a question which I have received regarding negative interest rates, since there's a lot of Danish banks that have now lowered the amount of cash that you can have stored before you have to pay a negative interest rate. And finally, I will look closer at Store Capital's last quarterly update. So the first thing we immediately notice is that there's a green circle for this week's episode, meaning that the portfolio is up in value compared to last week. If we go to the portfolio values tab, then you can see that the value has increased by $4,500. And since the cost has not increased, that is actually a gain of $4,500, meaning that the shares have simply just increased a lot in value. Not too bad for a lot of boring companies in the portfolio. I actually believe that this is the biggest increase I have seen in the lifespan of this portfolio, and I'm happy to see that we are increasing the gap here, meaning that the value is really starting to surpass the cost, which you can also see here in the overview, since the portfolio value is actually up by a little more than 10%. If we then continue to my favorites tab, namely the dividends tab, then we can see that May is already starting to show as a really good month, since I have already received more than $173 since I have received dividends from LTC, CVS Health Corp, Verizon Communications, and General Dynamics. And I actually expect May to be my best dividend month so far, since I have done some additional investments since I received the $405 back in February. So we will see once May have ended at what number I actually land on. If we then go back to the overview arc here, and then I scroll to the top just to show you all the holdings in the portfolio, so you have all of them, and you can simply just pause the video if you want to take a closer look. Now I've just highlighted CVS Health Corp because that was one of the obvious winners within this week, since it has increased more than 10%. So obviously I'm quite happy about that, since I still own that stock. And if you're interested in getting this spreadsheet for yourself, then you simply go to the description down below for this video, or any of my videos for that matter. Then you press the link, then you click on file, and then you say make copy, and then you can freely go and edit and add in all of your holdings, so you have the spreadsheet for yourself. If we then turn to questions from the audience, then I have received a question that goes like this. Hey LMG, I can see that my bank have now lowered the amount of money I can have before I have to pay a negative interest rate. What can I do to avoid it? So the answer depends upon what bank you're using, meaning how much cash they actually allow you to have and what your spending is. Because if you, for instance, spend 10,000 Danish, just to put it as a round number, and I would like to have 12 months of savings in cash, that means that you need to have 120,000. But if your spending is 20,000 a month, meaning that you will need to have a cash buffer of 240,000, then the answer actually depends on where in this interval you are. Since I do not know what bank you are using, I actually found this webpage. I will leave a link in the description down below, because here I can see the amount of money you can have before you have to pay a negative interest rate. For instance, for Danske Bank, you can have up to 100,000 after the 1st of July, and this list was last updated as of 4th of May 2021. So I mean, if you can only have 100,000, then you actually need to go and do something. But I mean, if you for instance have Bank Nordic or you have Saxo Bank, where you can have either 250,000 or 500,000, well, if you're spending less than 20,000 a month, then I actually wouldn't be concerned. Then I would simply just invest the rest. Of course, this is really a personal preference and depend on your unique situation. For instance, if you're going to buy an apartment or a house or a car or something out of the ordinary, which actually requires a lot of cash, then you of course need to think about that. And perhaps if you, for instance, have Nordea, where you can have up to 100,000, well, maybe you can then open an investment account at Saxo Bank or at Nordnet, because at Saxo Bank they allow you to have up to 500,000 in cash, and at Nordnet you can have up to 100,000. So that is at least one way of increasing the amount of cash you can have before you have to pay negative interest rates. So to answer this question on a more personal note, since I'm also hit by these lowered amounts, since I can only have 100,000 in the bank which I'm using and then an additional 100,000 in my investment account at Nordnet, well, since those 200,000 is actually more than I intend or expect to spend within a year, I am comfortable with investing everything above that 200,000 Danish kroner. So I intend to invest everything above that number if I can find something that I still think is capable of investing at an attractive price. Otherwise, I will have to pay the negative interest rate. If we then continue to the quarterly update from Store Capital, I will go through this presentation. This is a 43-page presentation, so I won't go into all the slides. I will just highlight some of them and try to explain why I have a strong conviction towards this company, meaning why are they the biggest position in my portfolio. So first, what is Store? Store is short for single tenant operational real estate. So this first slide, or actually slide 5, really explains the business model, since it's single tenant operational real estate or profit center properties is a real estate investment asset class distinguished by 3 payment sources which combine with table stakes enable net lease contract superiority to the underlying credit quality profile of the tenant. So this picture to the left here actually describes really well what is the difference between Store Capital and other real estate investors, since all real estate investors has corporate credit and property value, but what is unique to Store is that they have this unit level profitability on top. If we then look at the picture to the right, the table stakes, this is a more detailed description of the 4 layers. And if we go through them, the first one, demand unit level financial reporting. This is essential to understand the real estate quality and contract seniority. The second one, always request master leases on multi-unit transactions. This is essential to achieve risk diversity and interest alignment. And the third one, invest in properties at or below replacement cost. This is essential to avoid monetizing business value into real estate value. And finally, the fourth one, invest at yields and gross returns in excess of the brokered market. This has proven to enhance returns and increase margins of safety. So in essence, if you understand this slide, then you understand their business model and what makes them unique. We will continue through the slides here and then I will return to this one afterwards. If we then continue to the next slide where they explain about the broad-based market needs, you can see here that there are some rated companies, then there are a lot of small companies, and then there are Store Capital's target market. And you can see the star that the companies have over 10 millions in annual revenue, meaning that there still is a large market for Store Capital to try and capture. So they still have the opportunity to be selective, and then they have these different criteria that a potential client needs to fulfill in order for Store Capital to be a good solution. If we then continue to the next slide, Store Tenant Profile, here you can see how much of the revenue Store Capital is collecting from the different tenants they have and how much revenue they actually collect from the different groups. So 3% of the revenue for Store Capital is collected from customers which have a revenue of less than 5 million. And as you can see here, 73% of the customers have a revenue over 50 million. They have simply just summed these 4 pillars to get to that number. You can see that there are employed 2.5 million workers. the tenant revenue in 2019 grew at over 12%. If we then go to the next slide, then Store delivers a leading net lease business model, and to quote the new CEO, Mary Fedeva, the many measures of our success are reflected of our business model, which has been tested and perfected through our years of real estate investing. Our efforts have resulted in a high quality and diverse investment portfolio, which is maintained by our skilled portfolio management and servicing teams to deliver consistent results. And to back up this quote from Mary Fedeva, then to the left here, they have actually presented this 7 net lease business model variables and how Store Capital's historical performance have been. And as you can see here, they have truly done an amazing job. If we then continue to slide 10, then they are creating superior contracts since our asset class allows for creation of investment grade portfolios. So profit center real estate as measured by the Store score improve the credit profile of our portfolio. This means Store Capital is capable of taking lower graded investments, meaning tenants that don't have that good of a credit score, but since they can on top put these master lease agreements towards the client, saying if this location defaults, then you cannot let that default without letting all of your shops default. So this will actually improve the credit score, or the EDF, the expected default frequency. So you will increase this Moody risk calculation from BA3 to BAA3. If you're not familiar with credit scores at all, then let me just give you 2 insights here. You usually have Moody's and Standard & Poor's, which are rating agencies that come out with ratings on different corporations and say how risky are they. What you need to know is the lower the credit score they have, the higher the likelihood there is for the company to default. So when you see Store Capital is capable of increasing the credit score for their tenants, this is really a positive thing, because then you can get a higher return, since you expect to get a higher return from something which is more risky. So if they can get the return from something which are supposed to be BA3 rated, but then instead get the same return from something which is now BAA3 rated, then they actually have made a superior contract, as they have stated on top of the slide. If we then skip all the way down to slide 15, diversification across industry groups, here you can see how the different industry groups are distributed within their portfolio. So they really have a diverse portfolio, as they state here. Store focus is on creating granular portfolio with non-correlated diversity, meaning if restaurants go up, maybe they lose something on logistics, but if equipment and sales and leasing is going down, perhaps medical and dental is then going up. So in general, they are trying to make predictable outcomes for you as an investor. So they have really done a tremendous effort here to allocate the assets into a lot of different groups. If we then scroll to slide 17 here, then the top 10 customers represent around 18% of the base rent and interest. And just as a funny note here, you can actually see that AMC Theaters is number 8, and that has actually been classified as a meme stock, since it has increased from around $2 and all the way up to $20 earlier this year. So this is probably the closest thing I will come to invest in a meme stock on this channel, since I have indirectly invested in AMC through my investment in Store Capital. If we then scroll to slide 19 here, then they highlight they have a sector leading long lease term and low 5-year maturities, because you can see the maturities in 2021, 2022, 2023, and so on and so forth. And you can see that it is less than 5% of Store Capital's portfolio where the leases will expire within the next 5 years. And here you can see some of the competitors and how their numbers look. If we then go to slide 21 and actually start to look at some of the growth and some of the performance from Store Capital, since we now know much more about what the company is actually doing, then we can take a look at the table here at the bottom left corner and see the annual return and performance from Store Capital and compare it to the S&P. So you can see last year Store Capital actually have a negative return of 3.4% compared to the S&P 500 that had a return of 18.4%. But if you go back to 2019, then you can see that Store Capital actually outperformed the S&P 500, and it really outperformed the S&P 500 in 2018. And it becomes quite interesting if you go and take a closer look here at the cumulative performance from Store Capital, since you actually have to go 6 years back, and then Store Capital have just slightly outperformed the S&P by delivering a return of 13% compared to the S&P with 12.8%. But you can see that there actually is quite a variance here. If we then go to slide 30 and look at the condensed consolidated statement of income, then we can see if we compare the first quarter of 2021 to 2020, we can see that the total revenue has increased, but at the same time the total expenses have actually increased significantly more than the total revenue. Hence, the net income is actually lower in Q1 for 2021 compared to 2020. If we then go back to slide 5 here again, this really is the essence of their business model and what makes Store Capital unique. So if you didn't understand the slide the first time, then hopefully it had become more clear with all the details that I have shown throughout this slide presentation from Store Capital. I know that I didn't spend too much time on actually talking about their quarterly results besides the net earnings, but that's because I felt it was more important to actually understand the general business. And I truly believe that this company has a competitive advantage since they have this multi-lease agreement and they are capable of getting better credit ratings for the companies which they have invested in due to this lease agreement, meaning that they can actually get a higher return for the same amount of risk than other real estate investors are doing. So that actually sums it up for yet another exciting week of the lazy money game. So now you know what I intend to do with these negative interest rates to which I will be hit, and you know much more about what Store Capital is doing, and hopefully it has become more clear why they are the biggest position in my portfolio. So if you like content like this, then please consider leaving a comment, giving me a like, or subscribe to the channel. It really helps me out. And until I see you next Sunday, bye!